Bharat Gianani is with us. Let's bring him on board. Bharat, I have the profit number with me. It's 1100 odd crore rupees versus expectation of 570 crores. What could have possibly led to such a beat?
Yeah, I mean, so good afternoon to the viewers. Basically, I think there could be an element of other income, and we have to see the forex adjustment also. But I think if we see the operating performance, it is pretty much in line with what the street was expecting. So I think the margin is close to 10%, and that is pretty much in line with what the street was expecting.
Through the highlights of the quarter gone by, Bharat, and they say that JLR has returned to profitability in Q4. So can we say that whatever the worst was for JLR, it's now over, and from here on we will only see turnaround for the company?
No, I would not tend to believe so, because Q4 is, if you see historically, is a very strong quarter. There is a seasonality factor to the JLR business, and Q4 happens to be a very strong quarter, and we have already seen stronger performance if we see on a sequential basis. But if we see on a year-on-year basis, still I guess the margin is on the lower side. There is a drop in the margin.
Yeah, margins definitely on the lower side. Would you attribute it to the fact that massive discounting took place in the quarter gone by to just clear out the inventory?
Yeah, a couple of factors are there. Massive discounting is there, as the management pointed out, and the important thing is the volume growth continues to be remain under pressure. So if you see year-on-year basis, there is a 12% volume drop. Discounting has been higher, and also if we see the share of high margin market, China has shrunk very significantly. China is a profitable market for JLR. The margins are higher if we compare to other markets, but that market has been reeling under pressure. And that is another big reason for a fall in the margin on a YY basis.
Patil also is with us. Ashwin, despite the weak market, Tata Motors has managed to turn profitable. What would you attribute it to, and is it because of any one-offs that you're able to see at this point of time?
We need to probe a bit more detail into the numbers that have come out just now. There's no reason why the company would be posting such strong numbers in this quarter. One thing is that the seasonality is a factor, because Q4 is generally strong, and we have not seen on the ground any significant improvement or development on the volume side as such, because we know that markets such as China and all have actually shrunk in this quarter, and there has been no significant booster for the for the company in this quarter. So we need to see whether there is a forex element in that, or other income has gone up, or is there any one-off, so that is it. I think that Tata Motors, it would be really very early to say that it has come out of the woods, and yes, a single quarter of profitability doesn't mean that it will be sustained over a period, over a continuous period of quarters, because last quarter we saw that the company reported their highest ever losses, and this quarter they are seeing some sort of turnaround, and there has nothing really great has happened in this quarter to say that this turnaround has happened, as such.
Right. JLR, even that has turned profitable, and of course everybody is surprised given how weak the market is globally, especially the kind of dent that they've seen from China.
Correct. That's what I meant to say, that maybe in the domestic markets, we see some improvement on sequential basis on commercial vehicles, but in the domestic markets as well, the fall is there on a YOY basis, and similarly on JLR as well, we are not seeing any significant improvement. China has been the underperformers in their overall scheme of things, and we are not seeing discounting reducing. There is a lot of pressure on the realizations and the margins and all. So overall they are also incurring a lot of capex and coming up with new plant despite a lot of pressure on demand. But in such a scenario, I think that we need to wait for 1 or 2 quarters more to see whether this kind of performance gets sustained. So it will be really very early to say right now that the company has been really been able to put up profits. We need to probe more into details into the numbers which have come just now.
Right, Bharat, I was reading through the commentary given by Ralph Speth, given by N. Chandra as well. It's very encouraging and optimistic. I mean, the numbers also mysteriously are quite decent as far as the estimates are concerned. But at the same time, at one hand, they're saying JLR, yes, had outpaced the industry, seen good growth across a few models as well. But at the same time, they're saying China is extremely critical at this point of time, continues to be a big pain point, a big hurdle, and that of course is going to be their top priority. So they are addressing the challenges coming in from China, but they see no further impairment in JLR value in use. How should one read this kind of a commentary, Bharat?
Yes, while in the last quarter they had taken a majority of a chunk of the write-off in the assets that led to a very massive loss. So in line with the evolving technology, the certain assets had turned out to be old. But we need to remember, taking the impairment, the capex requirement is still high. You need to continuously invest in technology, more so the electric vehicles, which are gaining a lot of traction. If you see key markets such as US, Europe, and China, even in China, the electric market is getting off very nicely. So you need to continuously invest in new technologies. And if we take the overall performance, if we factor some kind of improvement also, in this year, FY20, the company may still remain in negative free cash flow given the very high capex. That will restrict the valuation. And for a re-rating, we think that the volumes really need to take off from these levels. As we see in the near term, there are no immediate signs of volume taking off. So unless the volume takes off, and unless you have the capex requirement, unless your cash flow improves very significantly and it takes care of your capex, then only probably one can see some rating. I don't foresee that happening at least for next 1 or 2 quarters.
Ashwin, what about you? I mean, margins for JLR also have come in slightly higher than expected. Would you attribute it to the turnaround strategy, to the cost-effective measures and strategies implemented?
See, the company has been taking those measures of cutting costs and all, running their plant on lesser number of shifts and reduction in workforce at some of their plants and all. But this quarter, last quarter, there were some one-offs and all, and that's why the margins were looking a bit, stunted. But this quarter, maybe the one-offs are not there, and that's why the margins are looking better than what they have been doing over the past quarters. But all said and done, I would say that the growth will be coming from the top line itself. The volumes are key to their growth. Unless and until there is a strong growth in volumes, there is a turnaround on the volumes front, we won't be able to see the FCF getting positive, and overall market street expectations on the stock getting on the I would say on the buy rating, I would say. So I think that unless and until these markets, like the key markets like China, US, UK, and Europe improve, we won't be able to see any significant kind of up move in the stock price.
Okay, so at this point of time, clearly going by both of our experts' opinion, we need to read more deeper into the fine print, into the blueprint, because definitely there is no there's no valid explanation at this point of time, attributing to the good performance given by Tata Motors amid so much slowdown concerns domestically and for JLR as well. So let's wait and see, gentlemen. In the meantime, I just want to quickly address Bharat Forge as well. Bharat, how are you reading into the performance? It's been quite good. Going forward, can we expect some kind of negative surprises with a lag, given that even the management has addressed slowdown concerns?
Yeah, if you see the commentary clearly in the press release, the came out with the results was the export clearly, which forms about 60% of the revenue. They are saying that the export growth is flattening out, after 2 strong growth years. So definitely the outlook on the export front is cautious. In the domestic market, they have mentioned in the release that Q1 is expected to be weak, and they are expecting some revival from H2. But clearly, I think given export, which forms about 60% of the revenues, there is a note of caution. So definitely we will see some kind of moderation in the growth happening.
Okay, so some moderation expected going forward. But what about the ongoing, US-China trade war? Because rather companies like Bharat Forge are likely to benefit, right? They already have a decent amount of capacities inside the US, and even from India, they can export, given that China is clearly, doesn't seem to be working out for now, as in, with respect to the trade spat.
I don't think we need to really check, but I think Bharat Forge really has a presence in the US market, and as far as the forging business is concerned, the US customers tend to prefer Indian forging companies rather than, I don't think there must be much reliance on Chinese forgings as of now. So I don't think there will be any material benefit to forging companies such as Bharat Forge.
Then, why are there concerns, if Bharat Forge doesn't have much to worry about, if the exports are likely to do better, why is it that the management has said export is looks like it's going to be flattened out soon?
No, export is the concern is more cyclicality in nature. The industry itself is slowing down. So they have clearly mentioned in the release that FY18 and FY19 were strong growth years, and the company exports both to the automotive forgings, which forms a very significant chunk. So automotive industry, whether you take it domestically or globally, it is a cyclical industry, and definitely Class 8 they have stated in the release that the growth will come down in FY21. In fact, for FY21, we are expecting growth to be substantially lower because it's a cyclical industry and the slowdown will come down. They have also stated that the industrials are also, there is a volatile situation. So I think the exports commentary that they are giving, the moderation which is there, which is more of a cyclical in nature, and you cannot escape from that cyclicality.
Great chatting with you, and Ashwin as well. Thank you so much for joining in with your reactions for Tata Motors as well as Bharat Forge.